2021 has been a roller coaster ride of a year for cryptocurrency, but after going through a huge downfall in summer, it seems that crypto's looking good again. And in today's video, I'm going to explain what has changed. What's next for crypto? Recently, we've witnessed Bitcoin reach a new all-time high price. According to experts, this could have a massive impact on institutional buy-ins from major companies. And as we all know, the first half of 2021 was considered somewhat of a breakthrough that gave crypto tremendous focus and attention from the general public. However, crypto is nowhere near its peak. In fact, you can consider it still being in its infant years and constantly evolving by the day. This makes it very difficult to predict where things are heading in the long run. There's some hope in predicting crypto in the short term, however. Experts are getting better at getting a better sense of the market by following themes from regulation to institutional adoption of cryptocurrency payments. Now, even though precise predictions are almost impossible to achieve, there is one thing experts can say for certain, and that is that in the next half of the year, we will see a significant rise in the value of cryptocurrency. Cryptocurrency regulation. This has been one of the most talked about topics by investors in the past few months, and with digital currency only expanding, lawmakers in Washington D.C. and in many other parts of the world are trying to find out how to regulate the exchange and use crypto of a much safer way. Such a thing will help investors not get scammed and will also make it harder for criminals to use crypto as a form of money laundering. For example, China has already made its efforts clear about cracking down digital currencies by banning most miners from mass mining in China. On the other hand, the senators of the United States are attempting to bolster crypto tax reporting measures by considering releasing a new regulation. Head of the Americas at Amber Group, Jeffrey Wang, said that these new cryptocurrency regulations are the most unexpected extensions in the global crypto industry. He also added that they are going to shape the crypto industry even more and get one step further to its becoming a commonly used digital currency in day-to-day life. But just like most new extensions added to cryptocurrency, regulation come with a bunch of obstacles. The reason behind this, according to Jeffrey Wang, is because there are some agencies which differ by state that do not exactly have the jurisdiction to oversee everything. To say the least, setting clear regulations will remove the current roadblock present in the cryptocurrency industry. This will lower the risk of investors losing their investments, as they'll have more accurate guidelines to follow. How new regulations could impact investors. The biggest problem for the crypto industry at the moment is the IRS being unable to find cases of tax evasion. However, recently opposed legislation will make this possible. It'll also be better for investors as it will push them to keep precise records of their crypto assets and their capital gains and losses. These new regulations will also make investors report any of their crypto transactions. CPA, head of the new tax strategy at Cointracker.io, Shihan Chandrasekera, says that these new rules will significantly reduce the crypto tax filing burden that investors have to stress out about today. He explains that this is because exchanges will have to issue 1099-B tax forms with cost basis information to investors. There is one particular downside that comes with these new regulations, however. They will possibly affect the price of crypto that is still unstable. These unstable markets are also the reason experts always recommend investors invest no more than 5% of their total portfolio of investments or savings. Crypto ETF approval. There have been many reports that investors might soon be able to access crypto ETF. This will not only be a more convenient way for investors to maintain their assets long term, but it'll also allow them to purchase crypto straight from traditional investment brokerages. SEC Chairman Gensler announced at the Aspen Security Forum that will have multiple filings for crypto ETFs with agencies. He explained that such a thing was rather predictable. People do it in the bond markets and the equity markets, and now they want it in crypto too. Gensler added that he has high hopes that crypto ETFs will be approved by the end of the year. He also stated that there's a chance that approval might even take a year because of the endless of their crypto regulations being introduced momentarily. How crypto ETFs could impact investors. For the moment, crypto ETFs are not available in the United States, but with its approval in the next year or so being almost certain, it could mean that more people will get involved in crypto investments. This, of course, will positively impact the crypto market. We'll not only see a rise in the market, but investors will have it easier to manage their crypto assets, as it will be possible to add more crypto to a portfolio just by using the same brokerage investors use for their traditional investment account or for their retirement. But besides its positive trades, crypto ETFs doesn't necessarily mean it's risk-free. It'll still carry the same risks of partly losing your assets in case of a crypto crypto market crash. Broader institutional cryptocurrency adoption. Nowadays, big companies across the world have taken an interest and even invested in crypto blockchain during the 2021 breakthrough. Companies like AMC, for instance, have revealed that they will start accepting payments in Bitcoin by the end of 2021. On the other hand, companies like PayPal have already allowed their users to make purchases through Bitcoin. And despite Tesla banning Bitcoin purchases for a while, it is preparing to go back to allowing its customers purchase products with Bitcoin. Tesla itself holds billions of dollars worth in crypto assets. Other experts have predicted that bigger and international corporations will start accepting Bitcoin in exchange for their products or services. It only takes one of these big companies, for example Amazon, to create a chain reaction for other corporations to allow it as well. I mentioned Amazon as an example as it has sparked rumors that they are currently working on allowing Bitcoin exchange. They've even shared a job posting for a blockchain product lead. Walmart has also shared a similar job posting to manage its blockchain strategy. How crypto more institutional adoption could impact investors. Even though going to your local market and buying $70 in crypto doesn't make any sense for people right now, there are retailers that are starting to accept payments from all regions of the world. However, it will likely take a much longer time for the majority of mainstream companies to make payments in crypto possible. But the more companies allow Bitcoin exchange for goods and services, the more it will impact the crypto market prices. With more people using it for necessary daily needs, Bitcoin's demand will be higher, which will lead the value of crypto to increase in general. Bitcoin's future outlook. Being the biggest cryptocurrency out there, Bitcoin is easily considered the best indicator of the crypto market. Being the dominant crypto, the rest of the market tends to follow its trend, so if we see growth in Bitcoin, expect other cryptos to rise in value as well. In 2021, Bitcoin took investors on a wild roller coaster ride. With an all-time high price of $60,000 in April, Bitcoin's value was cut in half in July. But these past few weeks, Bitcoin has climbed its way again, almost reaching $50,000. This instability is the perfect example of why experts warn investors to not invest more than 5% of their entire portfolio in crypto. But the question still remains, what awaits Bitcoin in the future? According to Kiana Daniel, author of Cryptocurrency Investing for Dummies, there have been countless massive spikes and downfalls in Bitcoin's value ever since 2011. Daniel believes that the near future of Bitcoin will be unstable and unpredictable as it is today. But when talking about the long term, it'll experience growth and increased popularity as it'll be better understood by the masses. The cryptocurrency analytics platform Tokenmetrics predicted that there is a higher chance of Bitcoin reaching $75,000 by the end of the year than experience a drastic downfall in price. What Bitcoin price instability means for investors. The main reason Bitcoin continues to be unstable is that it wants its investors to play the investing game long term and not cash out after feeling comfortable with the amount of money it made. Price instability will continue to be present in the crypto world, but this doesn't necessarily make it a bad thing. If you plan to invest or have already invested in crypto, just don't worry about the downfalls. The best way you can do this is by not checking your crypto so often. This is a tactic that experienced investors do to not let their emotional reaction take the best of them during a crypto market crash. The future of cryptocurrency. The only thing that can be done at the moment is to continue further speculation on the price that cryptocurrency may have for investors in the near future. The reality is that no one can accurately predict how the crypto market will change, as we're still trying to figure out how it fully works. This is the reason why investors should only invest what they can afford to lose at the moment and rather stick to more conventional investments if they want secure and long-term wealth building. Thanks for watching. See you in the next video.